Welcome to Things Invest. We're talking about investing, finance, and professional development. For today's terms only, the investment guide talk today will be Ethereum TKTH. First, want to say happy Monday, everybody. Hope a great weekend, by the way. Respect to recording time of 9:19 a.m. on the Eastern time. Ethereum currently $3,729, down about 3.21% so far. On the overall crypto market, it seems like it's relatively, bearish this morning. Beside Dogecoin, which seems like it's driven mainly by, institutional buying activities, but also mainly driven by the media affectation, which, public investors are FOMOing into this asset specifically on driving some buying pressure, which we'll dive into the technical front to see the momentum for that going forward. Right, but with respect to the overall crypto market sell-off that we're experiencing right now, it's really coming from a collections of different factors that we've identified so far, and I've been collecting some news onto stitching the story together, right? And just to keep tabs, a couple of things, right? And I would say on a majority of the spectrum of the news has been relatively bearish, with some anticipatory news, with a confirmatory date, with the key catalyst that have been driving the surge is the Bitcoin ETF. It's expected to debut per CNBC on Tuesday, so technically tomorrow, on the New York Stock Exchange, right? So which will subsequently drive some buy the rumors, sell the news type of affectation. So which is one of the reasons why we're seeing some minimal sell-off across the board right now. In addition to that, we also have some news across the spectrum. On Market Watch about 12 hours ago, talk about collections of investment advisors saying that they're extremely skeptical about the first U.S. Bitcoin ETF because it's something that is still, frankly, we're still building upon, right? We're cultivating the architecture on a technological perspective, but also with respect to the privacy concerns and the regulatory infrastructure that, the Feds and the SEC are still working on. There's still a lot of unknowns, right? And when there's a lot of unknowns, at the same time, the mantra of ETFs has historically been, relatively more of a stable index type of related investments, right? With less volatility in place. So investment advisors are obviously more skeptical because there's just a lot of unknowns that they need to still, scrub through. So it's totally logical and it's understandable. And that, with that affectation, saying it, calling it extremely skeptical can obviously drive some, fear mongering, I guess, among, it, basically indicating to public investors that, these institutional advisors might not be as comfortable or as confident as it seemed to be on the media front like the last couple of weeks so far, right? The next one is talking about with respect to millennials are pulling cryptocurrencies out of the shadows in India. So it seems like there is some selling activities across the board coming majorly from the millennials in India. So this is an interesting type of activities that we're seeing in the regional perspective. So something to, that's good to know. It seems like with respect to, some of the, publication companies on a media affectation front are driving a little bit more fear mongering, indicating that there might be a lack of value with respect to crypto assets on how that's going to be implemented into our commerce system going forward. And with that indicator, drive some selling pressure in the India market, predominantly driven by the millennials, if you may. The next one's on Business Insider about, well, frankly, just came out like 8 minutes ago, talk about China's crypto ban creates a golden opportunity for the US if it doesn't mess it up. So I think the golden opportunities is with respect to something we've seen already, right? When we saw the China crackdown news that broke out, right? Shutting down the 10,000 mines, in China as indefinite suspension with no confirmatory dates on when it's going to be relieved going forward, that, with that sell-off subsequently allow us to buy at the dips, right? And with respect to Ethereum, that was the 2,758, which is the dip that we saw, right here, as we have indicated on the line right here, right? And, I know I personally bought one Ethereum, and I know some of my friends on YouTube as well also bought the dip because that was the logical technical consolidation zone that incentivizes us to buy, because at the same time, that was also the time when we were relatively depleted on the RSI ahead of the golden cross that we were forming, which allow us to get to the level of, close to $4,000 mark, right? And then basically the last couple of days so far, right? Next one on CNBC, talk about Bitcoin's bull mark, Yusuko, and I think he's a Japanese guy, Yusuko. I don't know how to say his last name correctly. See trouble at $60,000. Call cryptocurrencies overbought right now. This is something we've been talking about. This is the right call, I would say, with respect to the technical front. And I think, with respect to, despite Mark Yusko, he's a bull in crypto and in Bitcoin. We need to deplete the technicals, right? For us to cool down the RSI, cool down the MACD, form another golden cross all over again for us to sustain the rally going forward, right? So we'll dive into the technicals to see what are the levels to dollar cost average wisely going forward, right? And then the next one is saying that the next Bitcoin crash will be shallower than 80%, said Pantera Capital CEO. So I agree with that because of the fact that as we deplete, the next level of resistance that we'll go down to will not be as deep as we saw before because we need to build new architecture on as if we're gonna be building it upon going forward. So I think ideally we will need to come down to a more of a comparable level, and I think at the bottom for Ethereum specifically will be 3,150. And as we get there, the depletion will be like at the 35 all over again, and we will form obviously a death cross first. As we cross down, we'll form another golden cross as we scoot back up with the inertia, and that will technically allow us to further sustain the momentum going forward. So I agree with the Pantera Capital CEO that it's not going to be like 80%, but I think maybe half of that would be very logical. And that's pretty much it on the news front. There are other news that are relatively more trivial. Talk about just some celebrities buying NFT again. So nothing really worth mentioning. So let's dive straight into the technicals now. So with respect to Ethereum right now, we are still selling off. We're forming a curvature right now. We're still at the overbought at 61 out of 70 right now. So ideally in the comfort zone, which we try to get to, would be like selling down to the 3,650 first, which is basically a logical level that we are testing, but it's a non-substantive one, right? That the more logical level will be going down to 3,470, which I think is imminent, despite like the public investors kind of struggling buying back up. But if as we've been reading so far, the more substantive level would be ideally at the 3,150, right? So if you buy in the 3,470, that's a fine level because there is some substantive consolidation, but you could see that it's relatively premature, right? So ideally buying at the 3,150, 3,000, 2,750, 2,450 would be more logical in a technical perspective. And with respect to Bitcoin, we are struggling at the $60,000, which makes sense because we have been basically sustaining because of public investors, just lingering on at the ledge, right? But you could see that we broke that yesterday, and that was a relatively, warning sign on what's coming next, right? And you could see that as we broke that 60, because of the fact that 60 was a relatively monumental technical resistance level, public investors immediately bought back up. But we can still tell that, we still extremely overbought at 73 out of 70. And at the same time, we're still forming a well-back curvature right now. So ideally coming back down to ideally at the 55 first, and ideally at the 47 and 43 would be the next logical resistance levels, right? And you could see that we have a clear big gap that's formed. So whenever we form a gap, we need to fill the gap. So I think ideally to dollar cost average at, and I think we should technically see a sell-off coming because the cycle needs to go through that oscillation one more time, right? For us to deplete, for us to go to the next all-time high all over again, right? So this is not a good setup if you want to buy it now. So, and I do foresee some, buy the rumor, sell the news type of affectation, especially tomorrow as the Bitcoin ETF debuts on the New York Stock Exchange, so something to be mindful of, right? So I think maybe cool off a little bit, wait until RSI deplete back to normal, then you buy it. Dogecoin is pumping right now, and right now we're at the 61 out of 70. We are forming a curve back up, so this is relatively short-lived, I would say. And you could see how short-lived already. We pumped for like maybe the last 30 minutes, and we got to the 27 cents, and subsequently reversed back down because that was not a substantive level. Technically, you need to leap all the way up to the 30 cents as the next technical level that you could actually get comfortable. Right now, we're just basically levitating. So ideally, coming back down to the 21, to the 20 cents, or the 19 cents would be a better, more logical level. I wouldn't even touch it until we hit 21 cents, in my personal opinion, because of the risk management level. Cardano, we are forming a def cross right now. We have 43. So I think ideally selling back down a little bit to 205, which we saw yesterday, was the dip, and I think that's the next logical dip. But ideally, you could see that there's a gap as well that needs to be formed. And I think 187 will be the next logical dip if we gotta get there. Solana, we're down about 3.76% right now. And with respect to the level that we at right now, we are, I think, there should be some bullish momentum coming because of the fact that we're slowly fusing together. So there is a golden cross is about to be formed. But I don't think the surge is going to be relatively high. I think going to a 178 or ideally close to about like the 200, which is like 195, 197, would be the next technical leap up. That will be the max that we could get to, because by then we'll hit 70 again. But in terms of sell-off, I don't think we're going to sell like all the way back to 110 anytime soon yet. But it's possible if we have that like really large jerk moment, and if we oscillate in a very high level fashion, then you could drive some more fear mongering, and that could subsequently drive some sell off from the public side. Obviously indicated by a whale as one of the large red candle first, and subsequently the publics will follow. So with respect to XRP right now, we could see that we got to the next level, the 101, which was the next logical step that we got down to, and exactly how we have talked about on the technical front so far. And subsequently reversed back up, public investors immediately bought in because $1 is a very monumental mark again, right? And again, it's not a substantive level. I would say 110 is a more of a substantive level. But we broke it, so that's why we're kind of levitating right now. So ideally, buy at the 93 cents would be a better level, or 88 would be. I think you should technically wait because we're forming a def cross at the moment right now, and we're still at the 51 out of 70. So I think a sell off is definitely imminent. Polkadot is down about 1.79% so far. We are covering down a well back is already formed, 63 out of 70. So I think ideally selling back down to 32 at the bare minimum. But ideally for me, because like I don't have any Polkadots, I'll wait until the $25 level at bare minimum for me. Algorand, we are forming a def cross slowly. We're at the 50 out of 70. So ideally coming back down to the 168 again, right? I kept mentioning this number, 165, 168, or 150 would be the technical bottom from here. Now, with respect to the market cycle, again, right? Ideally for the crypto market, we need to deplete back to normal, to anger and depression stage. We have to, right? Despite how unobvious it is, and we need to go through that oscillation on a more of a depressed mode, I guess, for us to continue to go back to the hope, optimism, belief, thrill, and euphoria, right? And with respect to the technical level that we should technically buy at, these are for my own personal reference. Feel free to use this as your personal reference as well. And these are levels that I've identified for, when the RSI is depleted, when the MACD is about to form a golden cross. These are the, the reference numbers as a, form of entry price that you can use for your execution. Right. Again, this is my risk aversion. If you want to buy now, it's up to your risk appetite, right? Because ultimately, if you hold long term, these are still relatively of a discount number, right? If you hold this for the next 5 to 10 years. So really, hopefully this is helpful. I really appreciate you for joining me this Monday morning or evening or night, depending on where you are. And feel free to give me any questions and stay tuned for the call. Take care.